information.
Welcome back, folks. Dow's up 55, Nasdaq's up 116, S&Ps are up 21. Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kekstadt, we got a lot of action out here today.
We certainly do. The dollar is just continuing to get hammered and it's making some nice new lows since we've talked last week.
Yeah, no doubt, man. So what are you thinking here, man? I mean, we broke that consolidation.
Yes.
And it seems that it's getting ganged up on. I mean, euro wants higher price, pound wants higher price. Yen wants lower price, stronger against the dollar. It's pretty intriguing, man. I mean, well, it makes sense, right? I mean, that's the other side of it. If the dollar's going lower, those are going to go higher. So where do you think we can go?
Well, I think that, the dollar as a whole for the past 3 years has been pretty much in a holding pattern.
Yes.
Now, you and I, we've been talking for the past few weeks, and we've been kind of edging towards the dollar bear angle for a while now. And we've been talking, remember how we talked about the high and the low that was set in the dollar index in March when we had the extreme volatility in all the markets?
Yes.
And that was something that we had been slowly kind of, in a holding pattern. But as we slowly eroded, we took out the lows last week from March. That was a very big signal on a weekly basis, on a short-term basis, intermediate-term basis, and that confirms that. I mean, when you have the high that was set in March, that was a lower move high, and now that we've taken out the low from March, that was a higher move low. That's confirmed our longer-term trend now that we're definitely in a bearish cycle for the dollar, I think.
Yeah, and I guess for currency traders, I mean, it's pretty cool. You have a lot of choices out here, man, right? I mean, because as that happens, the euro, we're at 117. I mean, the next, I think was it 132? Let's see, yeah. I mean, that's game to 124, man. You got some resistance up here, but it seems like 124 is game there. The pound, wants a lot higher price, so there's going to be a lot of movement around here in this currency.
I think so for sure. And I think that the dollar as a whole, I mean, remember how we've been talking about the interest rate curve and especially how gold continues to pound, just blast through resistance. I mean, this is where big money is going right now. And remember I was talking a couple weeks ago when Tesla was making the high with the option pricing, how explosive it was and how buying options was almost like a license to print money for a while.
Yes.
I think that we're starting to see that buffer we're hitting a friction point, meaning that this is really confirming the trend with the bearishness of the dollar, meaning that right now, like the Fed's going to talk today, what are they really going to say? For the most part, you have your short-term interest rates that have already buffered through resistance, over the past couple of weeks to the point where they were when everything was excited, back in March. The 30-year is finally starting to really pressure that. It showed that, it's consistently trying to buffer resistance, and I believe it's going to continue to do so, especially as the dollar erodes. And the thing about the option pricing thing is it's starting to get back to normal. Okay. And when that starts to come back to normal, that starts to tell me that these trends are legitimized, whereas when you have such an erratic pricing differential going on when it comes to the options and the futures and the currencies, and these are even the currency futures and the currency options, it's not just the algos that are exploding and running these things all over the place. That's showing that there's a really big change in complete market sentiment. And I'm talking about the broad market, not the short-term influences the Fed today.
I can see what you're saying, man. It's amazing. Tommy and I talk about this a lot, too. It's amazing that the option traders, in general, or the whole pool, can really seem to get some stability on price over a period of time, and that's what you're really saying. That at first,
right.
It was but once it gets steady, it's like, okay, man, the probability is pretty good that's where it's going to be, man. It's pretty wild how that works, man. Yeah,
exactly, and you hit the key word there, probability, and I think that's something that we can start to come back to normal, because the coronavirus, the market's already figured out we got to live with it before whether we make a decision to or not, you know, and now I think that you're really seeing this as a reflection of the currencies. Like, you got to remember, a weaker dollar, for one, is good for America with what's going on right now. It helps to keep corporate earnings positive over the next few months, especially, you know. So, and the dollar also has been rallying basically for 12 years. You know, since 2008, or March of 2008. In fact, basically, it's a 12-year cycle that just ended this March, peaking out. You know, and I think that for us to trade lower, it's not a negative thing like, oh my gosh, the dollar's collapsing. The dollar's been so strong for 12 years. And consolidating for basically 3, buffering the highs. It's not a big deal for us to go lower right now.
No, listen, I agree. What I did, Teddy, right before you come on, I took the dollar back 50 years. And the normal range for the dollar, you know, and the lows are somewhere around 80 and the highs are somewhere about 97, you know?
Right.
I mean, you get 2 big spikes. We get the spike in 2000. Is that 2005? No, it's 1985. 1985, you went to 164, and then in 2001, you went to 131. But guess what? In both cases, you basically crashed out of those. So when you look at the, you know, where it's traded, so that's no big deal. You know what I mean?
No.
But, yeah.
No. Not overall. Like, and that's the kind of thing, like I tell people, you know, currencies are great for trending, but you can't look at the overall. Like, for instance, the euro right now is exploding against the dollar. If you look at the euro versus the pound versus the Swiss versus the yen and other markets, it actually isn't. It's not that strong.
Right.
You know, so you think about the euro is the biggest component of the dollar index, but as a whole, it's only strong against the dollar. So does that mean that the euro is strong, or does it mean that the dollar right now is just in a corrective break, which is really lifting? In other words, what is lifting what? Is the euro lifting itself, or is it being lifted because the dollar is falling right now?
Exactly.
You know, and I think that's what we're noticing right now, especially with the interest rate differential that's going on.
Oh, yeah. And, you know, what is going to be intriguing is that I think status quo-wise, we're all saying, okay, well, what can the Fed say? You know, but I think whatever the Fed says this afternoon, this dollar looks to me like it wants to go lower faster. And the currencies, I think we're going to get a lot of movement in the currencies here, man. So this is going to get intriguing watching this shake out. And I don't think it's like coming out of left field, whatever they're going to say. Do you know what I mean? It's like, hey, man, you know.
I think they're going to say what they've been saying. They're going to support, you know, any type of package that comes out, regardless of what they pass. You know, they're going to keep on buying the corporate debt market. They're obviously buying the Treasury market. That's not that until they say that they're going to slow down in that, which I honestly can't see them saying that for at least 3 to 6 months at least.
Easy, yeah, right.
You know. So what would shake up the markets? You know, there's nothing that helps to secure the trend. So until we see a tone change by the Fed, which, like I mean, we both, maybe you and I are wrong, and today they come out with some complete radical change. But we're not. I don't think we're living in the Volcker age right now. You know,
no,
the 1980s.
Not even close. They listen. They'd like to get back in a little inflation. I mean, the bottom line is that's what they're going to need to pay all this debt off. So you know,
Yeah. Well, take care, guys. Thanks.
Always a pleasure. Great education. Really appreciate it. You have a great week, safe week, and we look forward to speaking to you next Wednesday, Teddy.
Keep selling the dollar.
Keep selling the dollar.
Thanks, Teddy.
Take care, guys.
Stay right there. Tommy and I are coming right back, folks.